Hello everyone, today I am covering CARO, that is Company Auditors Report Order 2020. So now this is the Saransh module of ICAI. This is really good for revision, and this is the revision module which has been provided by ICAI, and from this we are going to revise CARO 2020. Now, CARO 2020 has been mandated by Section 143, subsection 11 of the Companies Act, and this particularly suggests that the companies, which have been specified here, they have to provide in the auditor's report. The auditors have to provide a statement on various topics which we'll be covering, and this has to be given under the CARO 2020. So now the statements will be on various topics which have been specified in paragraph 3 of CARO, paragraph 3 of CARO. And here we have firstly the application, that is on what companies does CARO actually apply. So CARO shall apply to every company. Now CARO shall apply to every company. This means a public company, an unlisted company, private company, etc. And it will also include a foreign company, that is, which is defined as per the section 2 subsection 42 of the Companies Act. So the foreign company which has been defined as per the section 2 subsection 42 of the Companies Act, that is a foreign company, shall also be included. However, there are certain exceptions. These are the exceptions which are not mandated to provide CARO 2020 and the auditor's report. So now, what are these companies? First of all, we have the banking company, which has been defined as per the Section 5 of Banking Regulation Act 1949. Then we have the insurance companies, which is defined as per the Insurance Act 1938. Then other one next is that Section 8 of the Companies Act. Now, on these companies, the CARO does not apply. So now the next one is one-person company, an OPC, or a small company. So this will be as per the which has been defined. This will be as per the Companies Act, the definition of these two companies. Then also on a private company, it is also not mandated, provided that it satisfies certain conditions. Now, what are these conditions? That it should not be a subsidiary or holding company of a public company. So if this particular private company is the holding or a subsidiary of a public company, then CARO will be applicable. Then what else? What other conditions that need to be met are the paid up capital, and the reserves and surplus should not be more than 1 crore on the balance sheet date. These three conditions are with regards to paid up share capital, or the paid up capital, or the borrowings, and the total revenue. So there are certain limits which have been assigned, and the dates which have been, the period has been assigned as well. So paid up capital and reserves and surplus, which should not be more than 1 crore on the balance sheet date. Then it should also not have the total borrowings more than 1 crore, which has been taken particularly from any bank or financial institutions at any point of the time during the financial year. So this is not about the balance sheet date. It should be if it is more than 1 crore at any time of the financial year from a bank or financial institution, an amount of more than 1 crore of borrowings, then also the exception will not be there. Then we have a total revenue which is disclosed as per the Schedule 3 of the Companies Act exceeding 10 crore. So this particular total revenue should be as per the Schedule 3. Now in the Schedule 3, what exactly is there? The revenue from operations plus the other income. And here it has been also mentioned that the revenue from discontinuing operations is also to be considered. So revenue from operations, operating income plus the discontinuing operations, the revenue from discontinuing operations, if it is more than 10 crores during the year, then also this exception will not apply, and CARO will be applicable on the private company. So if we revise about the private company, if we revise this, what are the exempted classes? A banking company, insurance company, then a Section 8 company, one-person company, small company, private limited company, which should specify these conditions, that is not a subsidiary or holding of a public company. The paid up share capital and reserves and surplus should not be more than 10 crores, should not be more than 1 crore on the balance sheet date. Then the borrowings from banks or public financial institutions should not be more than 1 crore at any time during the financial year. Then the total revenue, which means the revenue from operations, other income, and DCO, that is from the discontinuing operation, should not be more than 10 crores during the financial year. So this could be important point for the case studies as well.